First, what is a trend line? A trend line is a straight line drawn on a chart that connects two or more swing points in price. Let's look at an example. In this chart, we can see that price is fluctuating, moving up and down repeatedly. So, with all these movements happening, how can we tell where the market is actually heading? Simple, we draw a trend line. By drawing a straight line connecting the swing lows on the chart, we can see that the trend line is heading in an upward slope. This tells us that despite these short-term fluctuations in price, the overall market trend is up. Now let's look at the opposite scenario. Here's another chart. Again, we can see that price is fluctuating, moving both up and down. However, when we apply a trend line, this time connecting the swing highs, we can see that the trend line is sloping downwards, meaning that despite the short-term fluctuations, the overall market trend is down. Now, a question you might be asking is, can't we already tell where the overall market is heading just by looking at it? Why do we even need trend lines? The answer is simple. Trend lines do more than just show the trend. They also help us spot trade setups that we otherwise wouldn't have spotted if we looked at the charts with the naked eye. For example, in this chart, we've applied a trend line by connecting the swing lows. Now, notice that in the past, price tends to bounce off the trend line every time it touches it. This tells us that in the future, if price ever approaches the trend line again, there's a high probability that we can expect another bounce. So, a possible trade setup here would be to take a buy trade if price retraces to the trend line.